Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this wrap-up is for Wednesday, the 4th of August, 2021. So this morning we got the ADP report. It didn't match up to expectations. The market only put on 330,000 jobs. They were looking for 660,000. Now the big question is that the prelude to the jobs report on Friday? I wouldn't be surprised, but can't say that there's necessarily a correlation. We get the Challenger report tomorrow as well. That'll give us some more ideas. But the elephant in the room today was Federal Reserve Vice Chairman Clarida, and he spoke at the Peterson Institute at approximately 9 this morning, and he dropped the bombshells, and the market set to the downside off of it. He said that he expects that tapering will begin before the end of this year. He expects that interest rate hikes will happen in 2023. He does not think that inflation is sticky, but if it is, the Fed has its tools. And what he doesn't, I think, do enough of is worry about the COVID situation. Because the COVID situation is that elephant in the room, and if you think it's going away, you are sad. Eventually it peaks, I get it. But I've come to the conclusion that that remaining 30% of the American population that does not believe in a vaccine, you'll get some of them to get it, but you're not going to cut into it very deep. We're about where we are. I want to be so wrong, and I'd love to come on here and say, hey, boy, everybody stepped up for it. Without that, we have different variants that, according to what Dr. Fauci and others are saying, could easily develop and keep this going. I don't know what that does to the Fed plans. I know this much. Masks are now being mandated in all the schools in Illinois as of today for teachers and students. Enough where you get your own choice. The governor has done the right thing. He's telling you, you're wearing a mask. The end of the discussion. Why? Because you want the economy to go. You want the kids to learn. The kids have to go somewhere. We're social creatures. It makes sense. Enough with this. Well, the parent will decide. And you're going to get that all over. In China, you have a problem now with they are closing down transportation between major cities. Why? The COVID is out of control there. And that's hurting copper demand and other product demand, so we're witnessing that. But enough of that. Let's go right to the chart action, because you see a sea of red behind me, right? You had a lot of red today. ARK was a standout. ARK now has a pattern of higher lows, and with today's high, a higher high. Ta-da! Uptrend. The market has been fighting, let me back off here, been fighting a battle between the 18-day average, poked up even to the 200, down to the 100 for a while. Today, it got over that. Now remember, if you get over that, and I teach this in my charting course, what was resistance becomes support. That doesn't mean you can't slice through it, but that's the nature of the beast. The Bollinger Band, if the market's going to run to the upside, is about $1.80 away at 125.18, but you're overbought. Overbought generally doesn't attract new money. That's where money starts looking at it, and on the indicators, they get nervous. Could it embed? No, you're not even close to it, so you got a ways off. I have my doubts it's got legs, but I'd like to see it. The trend is up, not down. Apple in an uptrend. Momentum here still pointing to the upside. If it can lift itself, possibly the 149.73, the upper Bollinger Band's the target. The trend gets hurt and out of play. It becomes no trend at all if it gets to 145.17. In PAVE, the market has an embedded reading that is on the verge of being lost unless this market's up tomorrow. So this is very, very important. This type of pattern is what happened on the close of business today in the Dow. And then in the early evening trade, it's losing it. Now, I don't know if it'll lose it all by the day tomorrow, by the end of the day or not. And I don't know what this will do, but you don't want to be adding in those type of markets. And any move now under 2605, probably nail in the coffin that it's going to lose it and head back into this region temporarily. So I think the easy money was made getting up to the Bollinger Band. Now you've got a problem. XLI, when it hit that upper Bollinger Band, that was the ball game, and the market has no trend to work with here. It still doesn't. You've lost your readings. I don't know what to do with that chart. Semiconductors, you got up to the upper Bollinger Band right here. I don't care what it does after that. You're not embedded. You don't have both numbers going sideways in the slow stochastic over 80. All this was, in my eyes, was a vertical price run, captured the shorts. I don't think it's going to do anything for the longs. I pray I'm wrong. I want semiconductors to make a run here. Longer term charts look good, not the short term. PODX still in a bear move, oversold as can be. What can you do with it? Not much. ESGU, you've had a correction in an overall market that's had bullish bias. Can it do anything right here? It's not saying that it can't. It has the embedded reading. I think the pros have been buying. I think they will throw in the towel if this number closes under 79. Without that, I think they're looking for the upper Bollinger Band. In XLE, the energy sector, again, this was an uptrend, a contra-trend rally because you've been under the 18-day average. So it rallied there, and any move tomorrow under 48.40 is an all-out, the way that I teach charting, sell signal, looking for the 46.72. You wouldn't want to see prices in that case back over up here, the 50.62 level. If you look at the emerging market ETF, it's still trying to embed. Did it do it today? Both numbers over 80 on the close. Both over 80 yesterday. And on Monday, ta-da, both over 80. So you got your 3 days in a row. So what normally occurs is on pullbacks in the market now, until that red line closes under 79, I think you're going to attract professional buying as they look for the market to exceed these highs and get up to the Bollinger Band. Doesn't mean that's how it is. I update all this in great detail in my morning subscriber videos, not here. I don't give you buy here, sell there in this. I do that in my morning subscriber video. I'm quite aggressive. In the gold market, what do you do the first time you hit a Bollinger Band and you're not an embedded reading? Well, you have two resistance points here. You have the 200-day average if the market rallies and the upper Bollinger Band. If you get underneath right here, which is the 169, to be specific, 169.10 level, you get an all-out sell signal calling for first 168.59, then 167.78. But what did the market do? No. The market came down, took out yesterday's low, went up, hit both the 200-day and the upper Bollinger Band. You can't say that you didn't get into the resistance, and collapsed after that. Tomorrow will be an important day in this market. You have an outside day up. If you take out today's low, the odds favor you're going back to the 100-day average. In GDX, what I teach is right here. When you hit the 200-day, the 100-day, the upper Bollinger Band, so long, folks, out you go. What do you do in TLT? Well, this market is saying things aren't good. You're still seeing low interest rates. Do you know what the 10-year note went to today? 112. I think that's the lowest since the beginning of the year. Unbelievable. Wasn't this supposed to be a market? And I still see people on TV saying, no, we'll be back at 2% by the end of the year. Okay, I'm not saying it can't happen, but why is it going to happen? Explain that to me. We haven't seen the job growth that we should see. We haven't yet seen the problems fixed in the supply chains. Why is that going to cause interest rates to go up? So you put it all together, you try to come up with a game plan, and that's what I do. I teach in my course, and don't go away, stay with us, 5 indicators. I see people that have all these indicators on their charts. I get lost as to why they do. Each indicator is supposed to filter the other one. So a swing line's a trend. A moving average is a filter on the swing line. You have bullish bias, bearish bias. What possible objectives could that offer? The slow stochastics, your momentum. It's telling you, hey, I'm overbought, I'm oversold, or no, I'm ready with you on the trend. Bollinger Bands are clear-cut profit objectives if you can get to them, but you don't always hit a Bollinger Band. So window envelopes come into play. There's deviations from the 18-day average. I teach how to do all this. I can teach you how to do this. It's that simple. I really believe that. Sold lots of these courses, thousands of them over the years. How do you get it? It's $249.95. You're going to get my full research if you're not already getting it. You're going to be able, by the way, let's assume that you don't want the futures research of the video, you want the SPDR ETF. I'll give you that. So that's thrown into it for a month. You get my charting software, that's thrown in, that's $100 by itself. And you get all the courses to work with for that period. Come on. You want to learn, this is the time to do it. The trading season starts right after Labor Day. Everybody gets serious and the markets take on a different nature. The vacation time's over, the kids are in school, it's time to play with the money. Go to our website, under the word education, my courses are there. You have a good night.